Imagine risking everything for one big win, only to lose it all in one bad decision. That's the brutal truth of trading. Skill means nothing without control. The real pros don't chase profits, they protect capital like bodyguards. This video isn't about making money fast, it's about never losing it stupidly. By the end, you'll know how to master risk, emotions, and build a system that actually lasts. Now let's understand why most traders lose even with strong chart knowledge and endless strategy tweaks. The market doesn't punish ignorance, it punishes emotion, impatience, and rule breaking under pressure. One impulsive loss turns into revenge mode, and logic disappears faster than a weekend pump. Winners don't trade more, they react less, they let patience fight where emotion wants control. When you manage your reactions, your results start following your discipline instead of your mood. Let's focus on the real mathematical edge, the power of a strong risk-to-reward ratio. If you risk $1 to make 3, you can lose most trades and still grow consistently. Imagine losing 6 trades and winning 4, yet walking away profitable. That's how pros think. Trading isn't about prediction, it's about probability stacked through discipline and ratios. Your goal isn't to be right often, it's to lose small and win big every time. Let's understand why stop losses are your true allies, not enemies, in trading survival. A stop loss isn't fear, it's self-respect. It says, I protect my capital before my ego. Think of it like a seatbelt, you don't expect to crash but you still wear it. Place it where your trade idea fails, not where your emotions feel safe. Controlled losses today are the tuition that buys tomorrow's financial freedom. Now let's look at how to set stops that make logical sense instead of emotional sense. Your stop should lie behind structure, below support for buys, above resistance for sells. Placing it too tight might save a few dollars but costs your peace and consistency. Once price moves your way, trail your stop forward, never backward out of fear. Smart stops aren't punishments, they're insurance policies that let your logic outlive your emotions. Let's focus on the true power behind consistent longevity, proper position sizing. Even perfect analysis means nothing if your position size makes every candle an emotional roller coaster. Pros risk small, usually 1 or 2%, because emotional stability equals technical clarity. When you risk too much, you stop reading charts and start reacting to fear. Big traders think small with risk. That's how they stay in the game for decades. Let's understand why the 1% rule protects beginners better than any strategy ever can. If you risk only 1% per trade, you can survive 50 losses without losing control. That small limit turns fear into focus and emotion into calculation. It gives you breathing room to learn while staying financially alive. Survival builds confidence, and confidence compounds faster than profit itself. Now let's look at how patience quietly builds fortunes faster than greed ever could. If you grow just 2% weekly, your account doubles in a year, no stress, no burnout. Small, consistent wins compound like magic while emotional traders chase explosions and end up empty. Trading isn't a race, it's a marathon of controlled progress. Slow is smooth, and smooth eventually becomes unstoppable speed. Let's focus on the emotional roller coaster every trader rides but few learn to control. Every candle flicker releases dopamine or cortisol, excitement or stress, shaping your next decision. The secret isn't to avoid emotion but to trade through it calmly and consciously. Pros breathe when others panic, they execute when others hesitate. Emotional control is the invisible edge that separates gamblers from professionals. Let's understand the twin emotional traps that make traders their own worst enemies, FOMO and FUD. Fear of missing out pushes you to buy tops believing momentum will last forever. Then fear, uncertainty, and doubt force you to sell bottoms right before recovery begins. Imagine buying Bitcoin at the high because of hype, then dumping it when headlines turn red. Missing trades never hurts long-term, but forcing them destroys your edge instantly. Now let's look at the deadliest habit of all, revenge trading. After a loss, ego whispers, win it back, and logic vanishes into emotional fire. You re-enter without setup, chasing redemption instead of precision, feeding the market your frustration. Professionals know the market doesn't care how they feel, only how they react. The smartest trade after a big loss is no trade at all. Let's understand how emotional awareness turns chaos into clarity during trading decisions. Before clicking buy or sell, ask yourself, am I calm, or am I reacting? If emotion answers first, delay the trade until logic takes control again. Journaling your mindset before entries exposes your behavioral patterns like a mirror. Awareness is the first weapon against impulsive trading. Now let's focus on the unglamorous but priceless skill, pure discipline. Discipline means saying no to tempting setups that break your own plan. Every skipped bad trade strengthens your decision muscle and sharpens your edge. Discipline compounds faster than profit because it builds trust in your process. The moment you master self-control, every chart starts working in your favor. Let's look at why trading without routine is like boxing without warm-up. Athletes prepare mind and body, traders must prepare emotions and plans. Start your day reviewing setups, not scrolling headlines for excitement. End it with reflection and journaling instead of regret and impulsive revenge. Rituals create rhythm. Rhythm builds consistency. Consistency creates mastery. Let's understand how true traders recover after inevitable losses. Every loss hides data, not disappointment, waiting to be studied for growth. Imagine taking a break, analyzing your mistake, and returning stronger instead of chasing payback. That pause resets your logic and rebuilds emotional balance faster than any win. The market rewards reflection, not reaction, evolution, not ego. Now let's focus on how confidence is earned, not felt. Confidence isn't a mood, it's evidence built from repeated disciplined actions. When you follow your plan long enough, results start validating your patience. That trust removes hesitation and brings calm even in chaos. Confidence through consistency becomes your superpower in uncertain markets. Let's understand why a system replaces stress with structure. Without rules, every candle becomes a new emotional decision. A system defines what to trade, and when to stop. It transforms guesswork into process and impulse into patience. Without it, the market becomes your system, and that's a losing one. Let's look at how to build a personal trading blueprint. Write every rule with clarity. Vague plans create vague results. Define your trading hours, market types, and valid setups in detail. Simple, specific systems outperform complicated emotional ones. Your rulebook isn't control, it's freedom disguised as discipline. Let's focus on creating structured entry logic that stacks probabilities in your favor. Your trade should align structure, signal, and confirmation, never one without the others. Price at support, pattern confirmation, and momentum agreement create confluence. If even one condition fails, skip the trade without hesitation. Patience in entries builds long-term consistency and emotional control. Let's understand why exits define professionals more than entries. Plan your profit targets before clicking buy. Emotions are loudest when money's on screen. Take partials as price moves favorably and trail stops to secure gains. Never let a winning trade become a loser out of greed. Smart exits protect not just profits, but mental peace. Now let's understand how trust turns plans into power. After testing and refining, faith in your system becomes your foundation. Doubt whispers every time the market moves against you. Stay grounded in your rules. Trust creates calm. Calm creates clarity. Clarity creates profits. When process beats emotion, you trade like a pro. Let's bring everything together into the professional mindset. First survive the chaos, then scale with structure, and finally thrive through discipline. Protect your capital, master your emotions, and trust your tested system relentlessly. Trading isn't prediction, it's preparation executed with patience. Stay alive long enough, and success becomes a mathematical certainty. Let's recap what we've learned throughout this session on risk, mindset, and emotional control. We discovered that protecting capital matters more than chasing profits. Survival always comes before success. We saw how discipline, patience, and structure build confidence that no single win ever could. You learned how emotions like FOMO and revenge can silently destroy logic if left unchecked. Carry these lessons forward, because mastery isn't found in charts, it's built through consistency and control. Congratulations, you've leveled up as a trader. You've mastered risk, emotional control, and the mindset that keeps accounts alive. Staying calm under pressure isn't luck, it's your new skill. From here, every step builds profit and mental freedom. Consistent control is your superpower, and you've unlocked it. Next up, we'll dive into the art of perfect timing, mastering your entries and exits like a pro. You'll see how market, limit, and stop orders shape each trade, and how to confirm entries with structure and true confluence, not just instinct. We'll refine stop-loss placement using logic and chart flow, not random wicks. Get ready, this is where precision turns discipline into profit. See you in the next video.